We've found 3 stocks you've probably never heard of. And the best part is they look like they are preparing to pop. When these kinds of stocks move, it's usually big. Backed by Australia's leading government-accredited share trading education and insights that are sought after by major media outlets Australia-wide, we'll break down all the key things you need to know to navigate these stocks like a pro. I'm Philip Tortevsky, joined by senior analyst Pedro Banales, and we are Wealth Within. Good evening, mate.
Good evening, Phil. Great to be with you again.
Awesome. It's nice that for a change we can go dive into the uncharted areas of the market, but let's get right into it. Now, first up is Aroa Biosurgery. Now, a little bit about this stock here. Obviously, we've trawled through the outskirts of the market, so all of you specky traders will be quite happy with what we've done today. But the first one here, it's an AI-driven cardiac imaging technology. It's got a massive addressable market if adoption accelerates. It's at the commercialization stage rather than pure concept stage, which is awesome for some of these biotechs because a lot of them sit in the concept stage, which is, to me, where a lot more of the risk sits when you're trying to play that market. And when you look at the chart, it's relatively liquid on the monthly time frame. But one major contract or reimbursement milestone can really change the scenario for this stock after valuation. And the big thing on top of all of this is the healthcare AI space really remains a sector institutions will pay a premium or premium multiples for. And we have seen it with the most recent Chapter 13F filings out in the US, where all the hedge funds disclosed what they were buying and selling for the previous quarter. The major theme you and I got from all this, Pedro, was that there was a lot of buying of new positions in healthcare, particularly healthcare AI type stocks. So right now, that space is hot, but quietly being, I guess, looked at and picked up. Money is being poured in there quietly under the radar. But when I look at Aroa Biosurgery, what's really interesting to me is that we've finally made a shift in price action. And this is a big shift. We're on the monthly chart. This stock has been in a downtrend since IPO. And right now, this is the first time something different has happened. We've broken through momentum, potentially signaling the start of a change. We've hit or we've established a serious level of support at 50 cents, where the market's tested on a handful of occasions. And right now we've managed to find a base above that support and above the long-term downtrend. So right now things are quite positive in terms of what could be for this stock. And I mean, if we do start to run up from here, really some of the major levels to watch for are potentially somewhere along these previous levels, which are going to be, I guess, the initial barrier for it around 80 cents. But then if it can get through 80 cents, this has got a real chance to move up into that dollar region. And if it gets to $1, typically that's where some of the institutions will really start taking a look at it, might fall into the higher market cap sectors and weighting sectors, and that's where the real growth comes. But the best opportunity sometimes is often found where the level is right now. So what I'm seeing, loving price action. We've pulled up. Sellers haven't been able to take the buyer's action. We're looking at a shift or a change in price action. We've closed above higher on May. That's June so far for now. So I'd like to see this market continue on. And the next immediate test will be at that 80 cents. If you can break through 80, I think this one's got serious legs for a long-term run. Now, just on that weekly chart, Pedro, I won't take all the analysis away, but your thoughts on this one, mate?
Yeah, I really like that retest that it's doing recently out of that low. I think that's a very good indicator here. So you've covered the monthly chart nicely. And we've seen, when you see this type of price action where you have a rise into a previous level and then a fall, but that fall doesn't necessarily come back to those previous lows, or even that all-time low that we saw here at 35 cents. When you see price starting to get picked up from that low, that is a very good sign. And the fact that we're doing a similar pattern now where we've seen price come up, then come back down, and it's not testing that previous low again. So if this continues to start, making new highs and new lows, and then breaks above that 80 cents that you mentioned, this is looking really nice. And I really like the sector that this is in, that biotechnology sector, and the fact that it's using AI. This is something that's largely being undercovered. I think everybody's talking about, all of these AI companies that are doing LLMs and, for that consumer type of retail market, but there's not many people talking about how AI is going to affect health. And health, I think, is the biggest industry that AI is going to disrupt. So this is right smack in the middle of that industry. And hey, it's forming a nice inverse pattern that I'm sure our students would know exactly which pattern I'm talking about. And unfortunately, I can't get into that on this show, but this is a textbook type of play that if it does break above that 80 cents, I think it's definitely got legs.
Yeah, if you do want to learn about the things Pedro's just mentioning, go and check out our website. Look at our share trading diploma, and it is on the our website, as mentioned, wealthwithin.com.au. It is government accredited. You won't find another like it, and maybe you'll get some insight into what we are talking about. Our students are having amazing results. Check out the testimonials as well. But if you want an introduction to all things we show here, and if you do want to look at be able to trade these lower cap stocks, it's not just for big stocks. Check this book out, How to Beat the Managed Funds by 20%. It is free, you just have to pay the shipping. It's from Dale Gillum. The link is in the description in this video below. But if you have thought that, hey, I'm someone who likes to trade small cap stocks or mid cap stocks, but I think, you have some thought that all we do is large cap, or the analysis and the way we teach applies to large cap, you'd be surprised. It works on, and you can apply all of this analysis over the whole breadth of the market. So check that book out. But let's move on to our next stock now, which is wrkr Limited, code WRK. Now this one, Pedro, when you look at this, yes, it is a little more illiquid than the previous one, but what's quite interesting about it is the catalyst right now. So we have had changes to payday super, which by the 1st of July will require employers to pay employees superannuation at the same time as their wages, replacing the current quarterly payment system. Now it's important I said that and posed that, scenario first, because payday super is one of the biggest payroll and superannuation rule changes in decades. Now, this company is, using your words, smack bang in the middle of it. And if management can execute well, the company could emerge as a key piece of Australia's superannuation payment infrastructure. They recently onboarded major superannuation clients and acquired payroll compliance platform PaidRight. Now, revenue growth has been strong, although the losses remain elevated. So right now, it's a bet on the future, this particular stock, but boy, we have seen buyers come in and really, drive the share price in anticipation of what could be. This is quite a bullish share price right now that we're seeing. And yes, we've had a decent pullback, but not unsurprising because the way price accelerated away was very sharp. The real test was going to be what came following, about how bullish this whole move was. And right now, what it's showing us is that the bulls are still firmly in control, especially if we come back to the sustainable rate of rise, this momentum line, and test up. So far during May, we touched it, found some buying, and June we're starting to reverse. So right now it is early, but boy, if we start moving up from here, it's going to give you even more confirmation that the bulls are in full control and we're likely to go higher, at least even test that 18 cent level or potentially the all-time high. But I love the way this has unfolded. Typical new stock with a serious catalyst and huge potential type price analysis. Gets the IPO dumped, accumulates strongly, now in expansion mode. So for me, I think I would keep my analysis to the monthly chart because that's where you really get to see what is going on with these kinds of players. But from your point of view, Pedro, what are your thoughts on this one, mate?
Yeah, this one's looking interesting for the moment. It's still falling, of course, so I wouldn't be trying to catch a falling knife. But what's interesting that, like you mentioned, after it IPO'd, it really fell, and it was quite illiquid as this downward move occurred. So this is why we caution people to participate in these IPOs, because most of them do fail after they come out. But then it started to become a little bit more liquid. You can see that volume started to come up, and then it went onto that sideways action where it did start to become less liquid again. You can see that the opens and closes, and it's quite jumpy. But ever since this period here, now market from this point on there, and if you can't see that, that says the 16th of the 8th, 2024. So that's the 16th of August, 2024. It looks like a different stock than what it did back here. So I'd be analyzing mostly this part of the chart and starting to think, well, what does it look like? Does it look like it's a stock that's in the expansionary phase or the contractionary phase? And really, I think that to be still in the expansionary phase, it needs to hold up above that 7 cent level. If it does come back to retest that, it needs to have a bounce and then have a sharp move to the upside and break that previous high. If it can't do that, then we're going back down to these levels at 3 cents right now. So it's at an interesting point. If you want to get in at a, if you want to be one of the early ones, you need to start looking at these types of stocks when they are at these levels. It's a little bit more risky, but if you know what you're doing and there are multiple levels and price analysis that you can apply to make your entries a little bit more safe, then, you can participate in these types of markets. But if you're a complete beginner, I'd recommend at least, reading Dale's book at first, or attempting even the short course before you try to trade these types of stocks.
Yeah, good advice. All right, well, let's get into our third stock because I think this one's got some huge potential as well. Now, this one's called Acusensus, stock code ACE. Now, what's interesting about this one is real business, real revenue, proven technology. It's road safety cameras and enforcement technology. It's got government contracts that can create long duration earnings streams. Relatively new stock. What I quite like about it is that unlike many other stocks, when they IPO, they have a little bit of euphoria and then fall away. This one seems to be holding strong post-IPO. We've now gone from 2023, it's been 3 years. Generally speaking, after stocks list, within 6 months, they're turning the corner and going down. Guzman and Gomez is a recent example, and there are plenty. But when stocks hold for 3 years, that means something. And look how strong the buying was in June 23. You'll see it on the weekly chart, where this one was really picked up post-IPO, which I find quite interesting. And then we've seen the market, really do what a really strong growth stock should do in terms of price action, and that is create higher highs and higher lows. Now, we are on the way down. Like Pedro said earlier, be careful about just trying to catch a falling knife. I'm not saying just because it's hit this level that it means it's a buy, but it's definitely moving back or reverting back to that sustainable rate of rise. So right now is the exact time you need to be watching this stock to see what comes next. But right now, obviously, we're testing that level. Volume's coming quite large. And I'd potentially just be watching for a turn of that momentum, which is somewhere above that $1.50 level for solid confidence that we're turning the corner. But boy, if we are going to continue this expansion and this be one of those slow, steady plotters with recurring and stable revenue or earning streams, then I think right now is the time to take a close look at it. And just one other thing I'll put is that there's some pretty nice support from previous all-time highs. That's another really strong marker about how strong this is, because what you'll find back in, and we could almost use this level through here to say the previous all-time high, or where price agreement was in November 23, was around 80 cents. The market took it higher to blue sky. And this is often where you find out whether there's value above the previous all-time high and buyers are willing to pay more for the stock. Well, we come back and we test that previous peak level, which was 83, and we test it on the flip side and find more. And that's the signal that tells you, hey, buyers are still in this and they expect more upside. Now, we get to that conversation again right now where we're coming into that previous all-time high at $1.24. We've shot through. Let's see if buyers are willing to hold that level and say, hang on, the market believes this one's worth more than what it was previously at $1.28, and we're about to find out. So I think that's the exciting part for me. Keep a close watch on this one. Your thoughts, Pedro?
Yeah, look, Phil, I can't say that I really want this company to be increasing their revenue, seeing as though they're involved in the speeding cameras business, and I'd be a little bit concerned if they do start. But hey, look, if you get a ticket, you may want to maybe invest in the stock and see if you can get your money back. So this one could be a way that you could get your money back and get back at the man.
Are you saying just it's okay if you want to break all the road rules, buy the stock, and you should be getting it at the break even?
Yeah, exactly. That's right. This one could be that kind of negating factor that you could invest in if you are that speed. Of course, I'm not endorsing speeding, but it's not nice getting one of these fines. If you're unintentionally doing the wrong thing. But technically, it does look quite nice. I agree. It's maintaining that momentum. It's at an important time now. Let's see what happens. And the volume is starting to come up as well. So there's more interest definitely in the stock. And we have seen that breakout of those consolidation periods. So it could do something similar. I'll just be waiting for a breakout, and I'd like to see it trade above that $1.70. But like I said, not on earnings if possible.